Good afternoon, everyone, and welcome to TBR's webinar, Devices and Platforms, Positioning for the Long Term, with Ezra Gottheil and Jack Narcotta. I'm Allison Crawford, and I'll be your host for today's webinar. After several years of explosive growth in mobile devices, things have settled down, except for the growing edge of the smartphone market in emerging economies. The PC market stabilized after a disruptive drop in sales and severe damage to some weaker vendors. Going forward, vendors have few new buyers. Most customer gains will be at the expense of competitors. This changes the landscape and the demands on the vendors. Before I pass this over to Ezra and Jack to discuss these trends, there are a few housekeeping items I'd like to cover. First, we're recording today's session and we'll be posting it to our YouTube site, TBRI channel. We encourage you to visit our channel to watch this presentation or any of the others that we've posted. Second, we'd like to hear your opinions and thoughts on the materials we're presenting. Please send any questions or comments to the Q&A or chat function. We'll address them at the end of the presentation, or you can send an email directly to any of the analysts or myself at the end of the presentation to set up a discussion. Third, we'll send out the slides to everyone registered for today's webcast within 24 hours of the conclusion of the webinar. You can also find these slides, as well as other thought leadership pieces, webinar decks, and commentaries on SlideShare at www.slideshare.net/TBR_market_insight. Now let me introduce Ezra and Jack. Ezra is a principal analyst for computing devices here at TBR, and he is the team lead on coverage of Apple, Acer, Dell hardware, Google devices and platforms, HP hardware, Lenovo, Microsoft devices and platforms, Samsung, Sony, and Toshiba. Ezra, you have your work cut out for you. Ezra is also a principal researcher on projects including consumer and business tablets, PC warranties, PC supply chain, devices as a service, Chrome OS, BYOD, mobile device strategies, app stores, and social networking. Prior to joining TBR, Ezra held senior positions in the personal computing software, online services, internet services, web services, social networking, and IT industry analysis industries. His experience includes management, product and services design and marketing, strategic planning, online community development, business development, and IT industry analysis. In his most recent vendor position, he served as a vice president of community development for Corporate Alumni, a social networking service for people who worked at major companies worldwide. Jack Narcotta is a computing devices analyst here at TBR and covers vendors such as Acer, Apple, Asus, Fujitsu, Google, HP, Lenovo, Microsoft, Samsung, Sony, and Toshiba. Prior to joining TBR, Jack was the proposal manager for the North American division of a global telecommunications equipment manufacturer. Using his knowledge of comprehensive IT and Ethernet network engineering, Jack was responsible for analyzing and ensuring compliance of long-term multi-phase equipment contracts and supporting account development and business partnerships in the U.S. and Canada. And with that introduction, let me hand this over to Ezra.
Thank you, Allison. I will be delivering the presentation, and Jack will be helping me with the question and answer period. Now, things have been changing for about a year as the markets have matured, saturated, stabilized, whatever words you want to use. But here at the end of the year, it seemed like a good time to take a look forward rather than backwards and see how things are going to look going forward. We see here a chart of the device ecosystem revenue pool, revenue from PCs, tablets, and smartphones, and we don't expect to see much of an uptick there. There will be some additional units sold in a couple of categories, but ASPs are coming down. So we're facing slow overall market growth and saturated markets. There's some expansion in smartphones in emerging markets, but for the most part, we're talking about buyers who already have one of each of the things they're going to have. So it's not about finding new customers. It's about taking new customers, taking them from your competitors, and making sure that your customers stick with you. So is there any other good news? And here we take a look at the profit pool, another area where we expect to see some shrinkage. Clearly, the profit was largely in smartphone. We all know the two major suspects there for profits. Well, one of them is going to be quite a bit down in the near term. That's Samsung. And one of them is going to taper down in the long term. That's Apple. So what can we look forward to? And I'm being sarcastic with good news. Longer life cycles. Basically, because the devices are more durable, and because the rate of technological innovation is slowed, people are keeping their things longer. Good enough is getting better. That is to say, the bottom tier of the device market in each category is providing a more satisfactory experience to the buyer, giving people reasons to buy lower-end devices. The switching cost to go from one device to another device, same brand, different brand, they've gotten a lot lower, and that means that it's sort of harder to rely on keeping your customers by sheer inertia. And the new customers coming into the market, in the emerging markets, are extremely price sensitive. They basically cannot afford the prices that the earlier parts of the markets could afford. So what are vendors going to do about that? Well, it's back to basics. These are businesses. These are businesses with relatively stable markets. We see some growth in units, but compensating falling ASPs means the revenues are not going to be increasing very much. There's some action in the PC business where some of the weaker members are falling out, so the leaders are gaining, but still it's a matter of staying efficient, staying on point, being strategic, and exercising against your competition. I think that the automobile industry is a useful model for the device industry. These are businesses where the form factors are stabilized. There's some amount of innovation, but you're mainly talking about branding, about marketing, about a delivery system, about working with your partners. So everything is about efficiency, efficiency in the supply chain, efficiency in your sales process, efficiency especially in marketing, and efficiency in delivering the product itself. In the case of devices, it's incredibly important to really get to know the buyer. When we were talking about innovative new devices coming into the market, there was a tendency to just throw out a device, say, look at all the great things it can do, and if you were first to the market with something flashy, you could win. In the case of PCs, which are bought in a commercial setting by one person and used by another, both the buyer and the user are important people to know. Know what they need, know what they want, and go way beyond just the actual physical product itself. Deliver the whole product. What people are buying, businesses and individuals, is they're buying the abilities, the capabilities, the services that are delivered via the device. And that includes having them start up and work well, having questions answered, having problems solved, having the ability to deal with failures effectively. It includes training and education, and it includes exploiting these for all the value and pleasure they can deliver. That's what people are paying for. And the companies that do that well and communicate that they do that well are going to succeed. And that's where marketing comes in. When you get down to a collection of pretty similar products from a collection of fairly similar companies, you're getting down to establishing an image of the company. People choose a particular kind of company when they buy a car, when they buy a device they think they know and understand. They form a loyalty to that company. They have an image of the company. They have an image of the products they give. They have an image of the people who buy from that company. So it's incredibly important to communicate the company image and the image of the kinds of products you build. At the same time, there's a lot of education still to be done in this market. All of these products do a great many things and do them effectively. And by communicating why your product does that one effectively and what that means, not merely speeds and feeds, but what it means in terms of using the product, that's how you can win in this market. The one big hope that we see going forward is that as good enough devices become lower in price, it will become increasingly possible to sell more than one device of a type to each buyer or user. Now, this is a long-term prospect. We don't see this beginning to happen terribly soon. But as people see that there's really no great cost associated with acquiring another device, again, we're talking both commercial and consumer, we believe there are opportunities for businesses to buy more than one device per user and for individuals to buy more than one device for themselves. This all has to be sold on the basis of the value. When you look at the value of the device in terms of the services and capability it delivers, you can get away with saying, well, you need one here and one there, or you need ones of different form factors. The things that make this possible are the data synchronization services that have now become pretty ubiquitous. Adoption is still not perfect, and this is an education barrier and opportunity. But the fact that putting a new device in your collection is no longer a major, lengthy, and painful process means that the opportunity is there for selling additional products. And then, of course, there's the lower entry prices for perfectly adequate devices. And then you can wrap this whole thing up and cause the sale of additional devices and cause the sale of additional devices within brand by delivering services, by offering service bundles, by offering services that exploit the synergies of having more than one device. So what we're going to do now is we're going to take a whirlwind tour of the vendors and of the platforms in this space with a little bit of the story of where we see and where we see them going. We're going to talk about the form factors, the three major form factors, and I will give a brief mention to IoT. And then we'll talk about the vendors, and a couple of our vendors are platform vendors, so we'll talk about their platforms. So let's start with PCs. Emerging from all the noise about PCs being replaced by tablets and you only need one thing and it's not clear why you're going to want a PC and all that, now PCs have a clear position as the ultimate productivity tool. The keyboard and mouse combination is just the best way to create content, and that's been pretty well recognized and acknowledged. So what we see is all businesses and most individuals saying, I need a keyboard mouse device if I'm not terribly, terribly price constrained, in which case I might try to make do with a compromised or combination device. So PCs have a long and solid position in the market. There have been significant improvements in PCs, in part brought on by the threat from tablets. Things about battery life being thin and light, instant on, and so on. And we hope for more improvements going forward as the threat from more consumer-oriented devices continues to be present. There's been consolidation in the market, which is one of the things that happens when markets kind of shrink for a while and stabilize. And what we're seeing right now is the big three vendors are growing at the expense of some of the weaker players. What we see going forward will be ASP erosion. We've actually seen some increase in ASPs recently as the advantages of two-in-one devices and touch screens and some of the benefits of thin and light and higher resolution screens have been delivered to the market. But long term, the costs of providing those capabilities are going to go down, and therefore the price of delivering those capabilities are going to go down. So let's talk a bit about smartphones. If you can only afford one device, this is the device you will own, and that's the reason why they outnumber all the other devices in the market. It's a communications device as well as an information access device, as well as a plaything and a means of acquiring content if you're in the more luxurious end of the market. There continues to be growth in unit sales, and there continue to be refreshes in this market, but the growth is at the low end because the new customers coming into the smartphone market are incredibly price sensitive. And there has been great improvement at the low end of the market, so there's less and less reason to pay premium prices for high-end phones. The entry-level and slightly above entry-level phones are very capable, whereas a few years ago they were not. Also, in the U.S., we're seeing a breakdown the subsidization model. The fact that you're paying for the phone in installments while you're paying for a data access plan is becoming increasingly transparent, and that makes the actual price of the phone much clearer, and that's going to get people to be buying less expensive phones going forward. Let's talk a bit about tablets. What we see now is a downturn in the tablet market, and we expect that to continue for a while because it's the least essential device. In most cases, it's a nice to have, unless you're trying to coerce it into being sort of a pseudo-computer. And one of the other reasons that it's coming down is that the larger phones are displacing the smaller end tablets. The first devices bought, even at the very beginning of the market, are still functioning extremely well. And while there have been tremendous improvements in tablets, the basic capabilities were there from the very beginning. So there's a low replacement rate for tablets. There haven't been many breakthrough innovations that cause you to want to completely discard your old tablet and buy a new one. What we see now is a shifting in the form factor center of gravity. For a while, we saw the center of gravity moving smaller to take advantage of increased portability and longer battery life, and also fully leverage the higher resolution screens. Now, with erosion from large phones, we see an evolution toward larger form factors coming across. What we have always seen from the very beginning with tablets is that the three platforms, iOS, Android, and Windows, really are three different product categories. There's not an enormous amount of crossover and comparison. There's some between Android and iOS, but for the most part, they're bought by different customers for different purposes. And we believe that there is a long-term opportunity in business for tablets. We think that the Apple-IBM deal has given other vendors a template for how to justify the purchase of a tablet, not as a PC substitute, but as a PC supplement, where the relatively low price and low cost of maintenance of a tablet, combined with very powerful and business-centric applications, particularly applications that tie into enterprise backends, justify the cost. That is to say, as we said, deliver the value. The value of one of these combinations is demonstrable. Let's talk very little about IoT. We will be talking a lot about it in the future. We have talked about it over time in the past. What we've said is that IoT is not one market. IoT is a collection of markets. Each IoT thing, each IoT application has to be sold separately for the value it delivers. These are different things that share some common technologies. The long term on IoT is that it's a very big deal, but it's not as big as smartphones. Smartphones are complex, expensive products with a lot of associated services that almost everyone has to have. While people will have multiple Internet of Things, there will be fewer, they will be smaller and less expensive. It's also a much more slowly growing and evolving market, which we don't really see any saturation point, endpoint. When a new application comes out, there's still market there for it. It's going to cut across the world of IT and not be at all confined to devices. And for that reason, device vendors are not the only players in this space. Middleware vendors, software vendors, enterprise computing vendors play a role, as do vendors of all kinds of things that are not currently or only recently connected. I noticed that Honeywell has aggressively followed Nest into the thermostat and controls market with a whole family of connected devices. So the number of competitors playing in IoT is great, and where a lot of the action is going to be in startups that invent new Internet of Things things. Let's move on and talk about the vendors, and these are our quick rundowns on what we see going on with them now and where we see them going forward. As Samsung begins to lose to competition and lose its distinction in the high end of the of the smartphone and tablet market, Apple is pretty much dominating the high-end consumer end of the devices market. It's where it is comfortable with a premium product to a premium market. It's not at the, you know, it's not a Lamborghini of devices. It's a Lexus or a Rolls-Royce. It gets a premium for a product in the same general category, and it gets a comfortable margin, not an insane margin. We believe, in fact, that Apple will have to lower prices and margins in the smartphone market. Apple tends to have fairly predictably approximately 30% gross margins and 20% operating margins in other families of devices, but in smartphones, these numbers have been closer to 50 and 40, and sometimes even as high as 60 and 50. As the actual price of the smartphone becomes more and more transparent, Apple will have to bring down entry-level Apple prices to be certainly a premium against its competition, but not as large a premium as now supports the very high margins they are able to achieve. This means that Apple will be coming in for a soft landing. They'll be able to taper down the prices and taper down the margins, and they have other activities. However, the long-term trend for Apple corporate gross and operating margins is down. The revenue is up, and all those other things are up, and they have a number of other irons in the fire, as they say, including the Apple Watch. We believe that the Apple Watch will be a successful product, but not an explosive product. We imagine that probably in the 20 to 25% range of iPhone users will eventually purchase an Apple Watch. They're loyal to the company, and indeed the company has done a very good job in defining what a device that you wear on your wrist can do. We believe that Apple is gaining some small amount of revenue and therefore profit out of Apple Pay. For Apple, this is just gravy. We don't expect it to be a major contributor, but we expect this to be another source of revenue and profit for the company going forward. And we certainly expect other vendors to enter into the mobile payments market now that Apple has opened the door. Let's talk about Lenovo, the hot company in PCs and devices. The company has many strengths. It's done exceptional brand marketing and exceptionally efficient brand marketing, which is one of the reasons that we've seen its margins increase. Lenovo's margins are relatively low compared with many vendors in the market, but they're up considerably over the last couple of years as their investment in brand marketing continues to pay off with not a tremendous increase in the cost of doing the brand marketing. We also believe that the acquisitions that they have made this year will pay off, that the Motorola acquisition will extend and expand their line of smartphones and tablets, and particularly smartphones, and that they have become automatically a major player in the server market with their IBM X System acquisition. However, for reasons of the next customer being harder to acquire than the last ones, for reasons of maturity in the market, and for reasons of the growth of the denominator, the inevitable law of large numbers, the overall growth rate for Lenovo will slow. It will continue to grow, of course, and its margins will continue to taper slowly upward. We see this company as being in a very strong position, but it has recently exploited some opportunities that are no longer going to be quite as readily available. We see them facing a brand challenge because of their Think product, they've established a premium brand position. However, to be a truly broad company, they need a broadband brand identity. And we think Lenovo can do this, but this is a challenge for them going forward, to establish a brand that implies quality at all price levels. Let's talk about Samsung. Now, the thing that I find remarkable about Samsung is they appear to have been surprised by the deflation in their smartphone market, where they were enjoying enormous margins without a large degree of differentiation, where at the high end of the smartphone market, They attracted some very, very aggressive competitors, and where the market inevitably was beginning to saturate itself. They certainly enjoyed a good run. I'm just surprised that they're surprised. They have quite a bit of overhang in their marketing expense, and we believe they did not use their marketing dollars as effectively as they could. All they basically said is we're not Apple, and they spent a lot of dollars to say that. There's a lot of other companies that make good phones that are not Apple as well, and they're losing customers to them, as well as not gaining as many new customers. But they're not a company to cry for. This is still a very successful company. It will, after taking some of the air out of the pricing in smartphones and some lots of market share as the competition becomes more intense, overall the company will return to growth and certainly will be very profitable. We believe that they have a number of opportunities in the Internet of Things, and they certainly have committed strategically to exploiting the Internet of Things to the maximum extent. Let's talk about HP. HP is now, it's benefiting in the PC world from consolidation, and it's a good thing that it is because it's also about to go through a transition. We think the transition will net out as being profitable, being positive for its PC business, giving the company the opportunity to focus on PCs and printers and use the benefits of its nice printer supply business to grow its other devices business. Up to now, what they've been doing is they've been rationalizing the product line. It's much more understandable and straightforward. The division into form factors and types and brand and price levels and et cetera has been very good. We think that 3D printing is a big winner long term for HP. We think that not only do they have substantial technology, but they also have the partnerships that will be necessary to bring 3D printing forward, starting at the high end, starting in the commercial space, and moving outward from there. But we think this is a long-term play. We think that HP has neglected its brand. It has an enormous amount of brand equity, it's a great historical story, but we believe that HP has not fully exploited that, especially in the consumer market where the brand is very recognizable, but it has no clear identity for the kinds of devices it makes or for the kind of people who will buy those devices. We think that HP has to work on that, and that could be one of the areas that HP Inc. invests. Let's talk about Dell. Dell also is a beneficiary of the consolidation, gaining from being one of the stronger players in the PC market from the relative collapse of the weaker players. And because it recognized after neglecting them that PCs are very important for Dell going forward. And it's communicating that effectively to its predominantly commercial, predominantly IT-oriented customer base. Its collection of software purchases is also beginning to pay off as it's using software to help sell its PCs and providing attractive bundles. And we think this is going to continue to help drive Dell's sales. It faces a challenge overall in fully monetizing its software investment. Because software is a very complicated product. A collection of diverse software is even more complicated. And it's a challenge both to Dell's existing sales force and to its growing channel to explicate and communicate the benefits of the software products that they now have. In terms of language, we believe Dell speaks extremely effectively to IT, but has not found a way to communicate effectively terribly often to either consumers or to non-IT business people. And we think that's a challenge for them going forward. Now let's talk about Intel. Intel was very late in addressing the mobile devices business. And really, it does not seem, as the mobile devices business is beginning to mature, that it's going to be, in any near term, a significant contributor to Intel. However, mobile devices are going to be around for a very long time, and so will Intel. long term, I think you'll see greater incursion by Intel into the mobile device space, and that is because Intel has an advantage over all its competitors in the technology of building the microprocessors, of producing thinner substrates, of delivering more, if ultimately more efficient devices. Since Intel is running well and profitable and its major businesses are doing well, it can take the long view and leverage its strengths in process technology. And in that context, IoT is yet another opportunity for Intel. It is not exclusively an opportunity for Intel. There will be a raft of more specialized devices inside IoT devices, and Intel does better with relatively horizontal processors or systems on a chip, not a great array of more specialized ones. So there's still great opportunities out there in the IoT space for ARM and its licensees. Let's talk about Microsoft, and here we talk largely about end-user software from Microsoft. They have had in the past some real software problems. Their products, while extremely powerful and flexible, often have usability problems, and they're not seen as being easy to use, easy to maintain, easy to explain, easy to diagnose. And that goes from its operating system down through its productivity platform, Office. But it is beginning to address that. And what we see happening over the last year is significant improvements in promised product and product, but most significantly, improvements in listening to customers and understanding what their weaknesses are and addressing those weaknesses. So we believe that Microsoft is seriously turning around its software problems, and that's very good news for a company that was successful even with problematic software. And that going forward, it's going to be very much stronger in its operating system and productivity platform offerings. We believe the invention of the idea of a product platform cutting across operating systems in a diverse device universe is a great solution for Microsoft. It kind of cuts across the commercial versus consumer positioning that they used to have, which was a bit confusing since consumers have to do productivity tasks as well. And we think that their play with Azure as the middleware for IoT has also got a lot of potential for the company. So we see Microsoft as being quite strong going forward, and that they do have a problem because of the lowering of prices of Windows devices with Windows revenue. But we think that everything else going on will compensate for that and allow them to transition Windows revenue to a model that will support multiple devices per user and will contribute significantly to Microsoft's revenue. Chrome OS continues to be a threat. We believe that Microsoft has done a number of things to lessen that threat, but nevertheless, we see Chrome OS continuing to erode, not only in education and consumer, but also in other commercial settings, Microsoft's virtual monopoly on personal computer operating systems. So in summary, what we see here is that the pace of change has really slowed, but we still have an awful lot of activity. We see a transformation in the industry to dealing with a situation where many of the customers already own one or even more than one of each of the categories of products that they want, but they have to replace them, and they can be sold new ones in certain circumstances. We think the key here is communicating the value of the products. That's not speeds and feeds. That's not characteristics. That's what you can do with them, because the fact is that these products are incredibly valuable. What they do for buyers and for users is amazing, and it's quite justifiable to extend additional expense because of the value they deliver. The key here is communicating in the language of the buying decision maker, what the value of the products are, what the value of your company is, what the value of your customers are to the company. and choosing appropriately where to play in this space, going after the places that leverage the advantage of each individual vendor. So I thank you very much, and now we're open to questions.
Great. Thanks to those of you who sent through questions. I do encourage anyone who has any questions now to send them through. The first one we have is, can you go into more detail about what sort of marketing will be most effective, both brand and product?
I think the key here in brand is in creating an identity either for the vendor or for the buyers of that vendor, or both. If you look again at the automobile manufacturers, they tend to tell the buyer what sort of buyer would want one of their vehicles. Are you a luxury-oriented buyer? Do you want a status symbol? Do you want the thrill of performance? Are you a risk taker? Do you have a rich fantasy life about going out into the wild or hauling horses around or something like that? Either of those approaches play, but they're very foreign to technically oriented companies that tend to want to talk about the attributes of their product or of their technology. With respect to the product, the key here is the value again. What are you going to be doing with this product? What is it going to be bringing to your business or to your life?
Okay.
Next question.
Next question. Are there any more aspects of the whole product?
So the whole product is again, the buyer is seeking something more than a thing. The buyer is seeking the value we talked about, the ability to do things, the ability to do things without problems. So this can include certainly services. It can include capabilities that make it easier to learn or easier to use. It can include accessories. It can include an ecosystem, an online ecosystem. The thing is to put yourself in the position of the buying decision maker and figure out what they want out of having one, not what they want out of one of the things. Go beyond the thing to the entire experience of having the thing.
Okay. The next question we have, how are the big changes in the device technology and form factor landscapes affecting the structure of channel? Will there be some integration of channels or more segmentation?
I think what you'll see going forward is the more interesting part of the channel will be more segmented. I mean, there are certainly channels like the big retailers that you see a big horizontal layer. I go down to the thing store and I buy a thing. But in terms of delivering the whole product, the whole experience, I think you can see some real specialization delivering to vertical markets, to businesses of different sizes and things like that.
Okay. The next question, is there a premium play in the good enough category?
Okay. So what we see now is that at the very bottom end of the capabilities of these devices, you can get a very adequate device for a small number of dollars. And the tendency then is to become completely a price competitor in that category. But the fact is that there are many users and many buyers who don't need additional capabilities but can benefit from better service, better support, or even just a better feel and look. So instead of treating every one of these purchases a performance-driven purchase and putting the best stuff only in the highest performing devices, you can produce products that can combine tolerable performance with other positive aspects.
A couple more questions, guys. The next one is, vendors like HP, Dell, and Lenovo often refer to security, manageability, and reliability in their marketing. How do users or IT managers differentiate when they are all trying to tell the same story?
It's a very good question, and I think you can rule out consumers. That's just buzzwords to go blah 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 blah, like the feature in the Charlie Brown cartoons. With respect to IT, it all has to do with the level of the audience. If the audience is really savvy about those things, then you're getting down to differentiating features. You can say, like everybody else, I've got this, and the other thing. This is what we bring that's different. Now we're talking about a technical discussion. It can be pointed and it can be very, very specific. The generalities don't pay off particularly well with either market.
Right, and this is Jack Narcotta. One of the big things I saw at CES, which is obviously very much a consumer-oriented environment, but during several of the keynotes and the breakout sessions, when you talk about some of those enterprise class things, and in particular security, it's really about attaching value, or even going a step further and understanding what value those particular things might have to an enterprise client, and obviously to consumers to some degree too. So it's a matter of making sure that the value proposition or the messaging that you're delivering that helps support delivery of those services into any kind of target market or customer segment actually has some value. Technology for technology's sake is a very dangerous road. It's particularly narrow with a relatively short runway, so that more targeted approach tends to lend itself to not only create more opportunities, but then when you actually capitalize on those opportunities, you have a much higher likelihood of creating a longer-term engagement with either your target market or within your target customer base.
Okay. I have a couple more questions in queue right now. The next question we have is, can the multiple device strategy work with smartphones?
Currently, in most cases, it can't, and that is currently a limitation of the network providers. However, I think with a strong partnership with a network provider, there is the opportunity that shows there is a benefit to the network provider as well as to the device vendor. There's an opportunity to sell additional devices. We see a little bit of that with HP's data path, where it's kind of going through, bypassing your current network provider and offering you a connection to other network providers in different geographies. So there's an inherent limitation where you basically need to be able to say, ring this phone, not that phone. But if the network provider can be convinced that there's a value in doing that, the capabilities can be built into the phones.
Okay. Last question we have right now. Do you see a reduction in growth of tablets or a net reduction in tablet volume over the next 3 years?
That's a very good question. I think that it's very possible that we will see a net reduction in tablet volume. I think we're going to see growth, be near zero, if not less than zero. The opportunity lies, I think, almost entirely at the low end of the market, where you can make the argument for owning more than one tablet. Apart from that, the world of people who can buy themselves a nice new tablet has largely been saturated, and thinner, faster, lighter, longer battery life is not really been a convincing argument, and I don't necessarily see it as becoming one. As I said, I think there are real opportunities in the tablet space for specific applications in commercial settings, and this will generate a lot of sales, but enough volume to turn that curve around, I don't think so. By the way, I saw that one of our attendees asked, why not Google, and Allison answered, and I'll be more honest. I thought I had included Google, and it somehow slipped my mind. Let me give you 30 seconds on Google. Google is gung-ho into driving its platform, consumer, commercial, everywhere. And it, I believe, will continue to keep Chrome OS and Android separate. They've announced plans to create a common development environment for Android and Google applications, their cloud services, which I think is a direct response to the Apple-IBM kind of deal, saying with our tools you can build both the front end and back end of powerful commercial applications. I can see them trying to drive Android sales in the commercial space with that. I think they're continuing to go forward with making Chrome OS a player in commercial settings other than education, and I see them continuing to be a major problem for Microsoft, and both a potential problem and a potential asset for device vendors. I think that they have been hit a couple times recently about the memory footprint of all the extensions to Chrome, which is also true in Chrome OS. And knowing Google, I think they're going to address that pretty quickly, and I think that's going to give them another surge.
Okay. We had another question just come through. The question is, speaking of operating systems, what do you think Windows 10 will have as an impact on device sales in 2015?
I think it will have a positive effect, but first it will have a negative effect. I mean, when Windows 10 is almost available, even though you get the free upgrade and all that kind of stuff, there will inevitably be people who say, I'm going to wait for Windows 10. But I think signs are that Windows 10 is a very strong play. Microsoft is also driving development of its browser with a Spartan tag, a dig at Chrome OS's porkiness, and with integration of Cortana technology. I'm looking forward to Windows 10. I think it's going to be much more responsive to user needs. Of course, with all new operating systems, there will be delay in adoption in the commercial market.
Okay, Jack. Okay. One more question just came through. Where do you see the market for 2-in-1s or detachables headed?
It's a PC. It's fundamentally blurring the lines between the two categories, and they're, with some of the advancements, particularly in product design, some of the more off-the-wall form factors that I saw at CES last week are a great example of how vendors are willing to continue to experiment. But I think it's a legitimate product. There's going to be a need for it. There's going to be consumers that love the form factor, that love being able to separate and carry around and then reattach when they need to. For an exceptionally mobile workforce, I think of industries like healthcare, finance, even perhaps real estate, or even to a degree in retail, or even in logistics. There's certainly a tremendous amount of use cases and applications that these devices are very strong in. So I think it definitely speaks to, while it's an innovative form factor today, it's the right device for what users, be they commercial or consumer entities, there's a need for it. It helps fill that particular void, or helps a consumer complete a task at home, helps an employee complete a task at work, much like how the evolution from desktops, we needed more portable connectivity. And once the notebook arrived, that increased worker productivity, consumer satisfaction, and the continued evolution, I think, will always be there. So 2-in-1s, and particularly detachables, while not in scale, maybe disrupting or beginning to, I'd say, contribute substantially to either revenue or profit targets, there's definitely a fit for those form factors within any particular target market or customer segment.
Okay, we had a follow-on question to that.
Yep.
So the question is, so the hybrid use case is mainly a growth driver for multi-device usage models, not 2-in-1s.
Yeah, I'd say that's a fair statement. We're always looking for new ways to interact with our devices, both in our personal and our professional lives. And vendors are increasingly aware that aligning the product strategies, aligning the pricing strategies also, that's obviously very important, but beginning to really listen to what the needs of the consumer are versus building a product just for product's sake is really becoming the foundation, or at least a very strong supporting cast member in vendors' go-to-market and product design strategies. So yeah, absolutely, I would say the use case is really driving sales of those particular form factors, and I would expect that to continue, especially as Windows 10 begins its rollout too, to tie back into that question.
Okay. Looks like, oh wait, hold on guys. Another question came in. Will desktop PCs continue to shrink even though the form factor options are getting smaller?
I'll take this one.
Okay, sure.
I don't think so. If so, only a little bit more and then level off. I think that in a lot of ways, the abilities of the other devices and the lower entry price for the other devices makes the desktop a long-term, separate, useful, and well-respected device. The expansion in monitors in every dimension has also suggested that a desktop is a long-term viable device, and in many consumer cases a part of the product family in the house.
Okay. So that was the last question, I think. We didn't get any more in. So I'm going to have to wrap up this presentation. I want to thank the analysts and everyone for attending. Want to alert those who are on the call about another webinar we're doing in devices on January 23rd. If you haven't seen the predictions document that we wrote, there's a 2015 predictions document that is available on our website now that you can go and download, and we'll be doing a corresponding webinar. It's a half an hour or an hour? I think it's a half an hour or so. On the 23rd of January around our predictions around where the devices market is heading. So we do encourage you guys to attend that webinar and download the document. And obviously, if you have any questions between now and then, please feel free to reach out to any one of us to get the answers to those questions. I would like to wrap up the conversation with, you see all our social media links here, Ezra and Jack, as well as TBR. You can follow all three of these addresses, these Twitter handles to get more insight and information about what we're seeing and doing in the devices space. I also encourage you to join us on SlideShare, YouTube, and LinkedIn. All of our previously recorded webinars are there. All the slide decks, as well as other pieces of content, can be downloaded there. So good resource for everyone who's looking for insight into what's happening in the devices market. So please do check that out. I'm going to leave the chat function open for another couple minutes in case anybody wants a follow-up conversation or has any additional comments. And on the way out of the webinar, there's a short survey that we always run. How good was the presenter? How valuable was the content? If there's any other open-ended feedback. We have changed our presentations quarter to quarter based on this feedback, so we really do appreciate if you can take the time to give us any insight into what's going to make this more valuable for you to spend the hour with us once a quarter. So with that, I want to thank everyone for attending and have a great afternoon. And again, reach out to us or follow us on Twitter, and we look forward to talking to you guys all on the 23rd of January. If not, we'll see you next quarter. Thanks, everyone. Have a great afternoon.
Thank you.